Well, good afternoon, everyone. Welcome to the Powers Now Commercial Real Estate Roundtable. My name is Steve Peterson. I'm your host for today's show. And in addition to being your host, I'm the broker owner of Infinity Investments, which is a commercial real estate brokerage and investment firm based right here in Oakland, California. And our focus of today's show is the state of the commercial real estate market in the pandemic economy. And I want to welcome Eric Frazier, the owner of The Power Is Now, along with VIP agent Jenny Gonzalez. Welcome to the show. And the goal and purpose of our show in general is to bring you relevant commercial real estate content that will keep you in the know about what's going on in the marketplace and what you can do to push your business or your portfolio forward. And many of you may be saying, well, who's this guy, Steve Peterson? I started in the commercial real estate business in 2003. I started my company, Infinity Investments, in 2009, smack dab in the middle of the Great Recession. I also earned my CCIM designation in 2012, and that stands for the Certified Commercial Investment Member. It's a designation that you get in the business. I was also the president of the California Association of Real Estate Brokers, as well as NorCal CCIM in 2018. Just a little bit about myself. Now, the topic we're going to be talking about today is where are we at in the commercial real estate market in this pandemic economy? And in future shows at times in the present, we're going to talk more about what sectors are most affected by the pandemic. We're going to talk about the primary and secondary lending markets. And more importantly, we're going to be talking about giving you guidance over the next 12 to 18 months in the commercial real estate market. That being said, we're going to take a quick commercial break. And when we come back, we're going to dive right into what's going on with the commercial real estate market and what you can do about it. Look forward to seeing you back soon.
There is nothing more exciting than the purchase of your new home. The Homebuyer Seminar is here to help you achieve the American dream of home ownership right now. We talk about access to lenders and nonprofits who are willing to give you the down payment for your home when others are not. That is right. The down payment assistance is not a loan. It is a gift. Find us at thepowerisnow.com and let us talk about how you will own your home today and live the American dream. The future is now. Watch us live on Facebook every Tuesday or in replay on the Power Is Now YouTube channel.
And we're back. Welcome back. And so it's time to get into where we're at in the state of the market. I just want to bring in Eric Frazier and Jenny Gonzalez. Thank you guys for joining us today. And, take it away, and then we'll get right into what's going on in the marketplace.
Steve, I really appreciate you, man, and for taking the time out of your busy schedule to host this show. You are a bona fide expert in the market, man, doing big things in commercial real estate. You bring credentials, experience, and you are in it in a substantive way in that you own your own commercial and residential real estate firm. And so I can speak as the president and CEO of the Power Is Now Media that we're excited to have you on the team to host this show because commercial real estate is being impacted by the pandemic in a major way. And we need to hear from experts like you that can help us understand, what to expect. And not that you have a crystal ball, but give us some guidance on how we should navigate through all the things that are happening as it relates to commercial real estate. And as a real estate professional, whether you're selling commercial real estate or residential real estate, we know that they're so connected, very connected. I mean, commercial real estate, it has an impact on residential real estate. And so I'm happy we have a VIP agent on the Power Is Now network that is an expert in this category. And we really appreciate you making the investment in time to be with us today.
Thanks. I'm glad to be here and looking forward to the now and the ongoing future. Absolutely. And I think what you mentioned that was important was commercial real estate absolutely impacts residential, maybe in different ways, but it certainly does. And, Jenny, I'd be interested in hearing your thoughts as we get into this.
This is Jenny Gonzalez with Keller Williams Corona. I have actually dealt in commercial real estate and commercial land, so I'm really interested to find out what your opinions are on what's going on with this, and maybe asking a few questions that some people may be wondering about. So welcome to the show, and I'm happy to be on today.
Thanks a lot, Jenny. Appreciate that. And Corona, California, it's a city in the state of California, not the virus. So, but thanks for being on, Jenny. Really appreciate it. And what's going on in the marketplace? And there's different food groups in commercial real estate. They're all affected differently. But I think the key is that unlike residential, we're in a little bit of a holding pattern in the sense of, the market properties are not flying off the market like they were a year ago. Investors are really kind of cautious more than anything else. I don't see, a big panic in the marketplace. I see a lot of caution in the marketplace, which, after going through what we went through in a Great Recession makes a whole lot of sense. I think it does make sense to be, cautious about what you're going to do. And I think particularly in the state of California, we've got a big issue in regards to how are we going to deal with tenants that are not necessarily able to pay their rent, and the rental laws, not permitting landlords to evict tenants, both commercial and residential. At the same time, we have many businesses shifting their business models in terms of how they do business. A lot of times, people needed maybe 20, 30,000 square feet, whereas now maybe they only need 5,000 square feet to operate their business. Retail properties, a lot of people need like prime, frontage, and a lot of foot traffic. So maybe they don't need that much anymore. So things are shifting, I think, is as it relates to how businesses are operating, how apartments are operating, how the payment flow and the working out of that is going to happen. So I think we're in a state of flux more than anything else. People are cautious, not so much optimistic, but I think the consensus from what I can see is that no one feels as though we're going to have a crash like we had in the Great Recession, because what this market run-up has been over the last few years is people putting a significant amount of cash into deals, lenders really thoroughly underwriting loans. So we don't think there's going to be a massive exodus and people abandoning properties. I do think there'll be many situations and circumstances where creative financing, negotiation skills are going to come into play when you're thinking about doing business in the future. Don't think we're going to see a big crash. I do think we're going to see a lot of just, creative, interesting situations where a lot of fortunes will be made for those positive problem solvers. So that's just my quick, synopsis on that. And as we look at what sectors might be most affected, I think that certainly the retail sector, the hospitality sector have been hit the hardest, although those sectors are beginning to come back and unthaw. Office properties, depending on if a building is hosting or is home to essential businesses, some offices up and rolling, no problem. A lot of them are impacted. Apartments are impacted, but not so much. Industrial properties rolling. And so it really just kind of depends. Be interested to hear you guys' thoughts or questions that you might have, Eric or Jenny, as it relates, because as we talk about the market in different food groups, I know that people out there may have some thoughts, concerns, or ideas about it. So, I mean, what's your guys' feedback as relates to some of those statements?
I personally have a question about repurposing. I've seen a lot of repurposing of the commercial properties that are being vacated. So they're using them for different purposes. Let's just say a restaurant has closed down. They're now trying to convert them so that maybe they can have people live in there since it's starting to get cold.
Yes.
The homeless really need places to live. So we're seeing a lot of commercial buildings being used to kind of repurposed in that way.
Yeah.
And I think that's like the best thing that we can do right now to try and protect everybody, because that's kind of the point of everything, is to make sure that there's a place for everybody. And that's smart, tactical thinking, I believe, on the city and county part.
Yeah. And you mentioned repurposing properties. It's always been a way of taking something that maybe is beyond its useful life and bringing it into the highest and best use for today's marketplace, for today's economy. And even before the pandemic in retail, for instance, we have begun to see a big shift in repurposing properties. Give you an example, Toys R Us filed bankruptcy, and then Amazon snapped up a couple of their sites and changed those old Toys R Us properties into Amazon fulfillment centers. So that's one example of repurposing. I'm working on a deal in Stockton, California, where it used to be a hotel, not a five-star hotel at all, but what we call as a SRO, single room occupancy hotel. Property is vacant. We're going to turn it into apartments. And so you asked that question about repurposing. It was already going on before, and I think we're going to see a major trend in properties being repurposed as this pandemic has shifted our whole economy and the way we do things. Eric, what are your thoughts on that?
Well, Jenny, I think that was a great question about repurposing commercial real estate. And when you look at what's going on, Steve, in California, particularly where we have the largest homeless population, we see already the state repurposing motels and spaces like that to temporarily house the homeless, and perhaps those temporary housing commercial or hotel motel operations might become permanent living quarters for the homeless community. But as an investor, I'm thinking with this pandemic, if it continues to go on and only the big money players like Facebook and Amazon and LinkedIn, who are buying up commercial space, are buying these significantly large properties that perhaps only they could afford, is there an opportunity for the small group investors and individuals to pick up retail space at a significant discount? And to add to that, can you repurpose truly commercial space like a retail center or an office building to residential to help with the housing shortage?
Yeah, and that's a great question. And I'll go back to the early 2000s here in Oakland. What was real popular when there was a big boom in people moving into Oakland in the early 2000s was taking industrial properties, warehouses, and converting them to housing. That was real big, not only here in Oakland, but across the country, especially for what we call urban core areas, where densely populated kind of areas close to the central business district that had a lot of industrial properties that were maybe previously used for factories or warehousing, but were in more demand for actual housing of people. So that was a big boom in the early 2000s. I believe before the pandemic, we already saw many shopping malls across the country being converted into housing with a little bit of lifestyle retail. When I say lifestyle retail, that means I'm going to go eat at a restaurant, a movie theater, lifestyle retail. That was already happening before the pandemic. Now, I think we're going to see a big shift in that type of an element of retail going to housing. I think we're going to see a big shift in hotels going to apartments. And I think we're going to see more office buildings be converted for different type of special purpose uses. You talked about homeless. The homeless encampments are really not safe in this, pandemic because the risk of spread of disease. So we as a state and as a country really need to figure out how to get homeless folks, especially in those encampments, into shelter where we can just monitor what's going on and provide a better situation, not only for the homeless, but also for the community in general, so that we can slow the spread. So this pandemic has, altered so many different things that I think that the highest and best use for properties a year ago for certain properties may not be the highest and best use today. The key for the entrepreneur, either as brokers, agents, investors, lenders, is to figure out what is the highest and best use for that particular property in that particular area, and to put some sort of a game plan in place to repurpose it. And that's repurposing properties have been a great way to build wealth, pretty much throughout the history of real estate. But in this era, we're going to need more entrepreneurs to be aggressively involved in this campaign as we move forward and we move out of this. Great points, though, guys. Now, the state of commercial real estate lending in secondary markets, and I'll just talk high level because this is a whole show in and of itself. Here's what I could tell you. Most of my business is in the apartment building world, the multifamily space, and lenders love apartment buildings typically more than other sectors because good times or bad times, people still need somewhere to live. What's going on, though, that I see is that lenders have a higher what's called debt coverage ratio. They are requesting higher amounts of your net operating income to cover their annual debt service, meaning that they just want to take a little bit less risk, bottom line. What they also are doing is building reserves into your operating expense. And I won't go too much into detail about operating expenses, but commercial real estate is valued based on the net operating income it brings in. And so we start with our gross income. We take away from that all the operating expenses to get to the net income. So what I see banks doing is adding additional reserves into the operating expenses. Lastly, I see banks all across the board requiring the borrowers to have more capital, liquid capital in reserve in the bank, in addition to their down payment at the time of close. Reason being, the banks want to insulate themselves in case that, hey, this pandemic, continues, states won't allow evictions. And so what that means is there may be tenants not able to pay their rent. Therefore, the landlord then has to shell out money to cover the mortgages. And so that's why the banks are asking for where they're building more operating cost reserves into their budgets, and they're requiring cash reserves, higher cash reserves than previously asked for by the borrowers up front to make sure that if there's any hiccups or continued hiccups, that the mortgage will be paid, whether the tenants can pay it or not. So that's a huge thing that I'm seeing. And I don't know if that's going on at residential at all. I know you do a lot of residential lending, Eric, and I know, loans, refis, and home loans are getting done like hotcakes. But certainly in commercial, they are building risk into every single deal.
Well, Steve, I can tell you that it wouldn't surprise me if we would see some changes in underwriting requirements for increased reserves. I expect as the pandemic continues, as the moratoriums come to an end, eventually for foreclosures, and as we see delinquencies start to rise, we can expect there will be some credit overlays at a minimum that may require greater reserves of residential borrowers, even on refinance customers. But as it stands right now, nothing like that has occurred. But it would not surprise me. Also, too, I'm wondering though, this increase in reserves on the commercial side. And by the way, too, Steve, First Bank does commercial and residential lending. So, folks, in addition to being, a host and the president of the Powers Now, I'm also a vice president and mortgage advisor for First Bank. My license number is 461807, and the views and opinions that I express on this show are my own and do not necessarily reflect that of First Bank. That being said, First Bank does commercial and residential lending, and I am going to get back to you. In fact, maybe we'll have a First Bank commercial loan officer on the show to dive into some of the new requirements, because I believe that what you're seeing is probably happening across the board. But that being said, Steve, I want to ask you, what are some of the workarounds to this? I mean, before someone might have the cash, now they don't. And I would love maybe for you to do a show on how you can form, groups to come together to buy these great commercial deals in spite of the bank increasing their reserve and operating capital requirements.
Absolutely. And that again, that's like a show in and of itself. And you asked about workarounds, and we're working around it right now. I can tell you on a transaction that I'm working right now, where they're requiring they lowered the loan to value to essentially 60% LTV, and within that, there's a 5% gap between what my client has in the down payment and their down payment and cash reserves, the loan amount and the purchase price. So what we're doing in that instance, we're asking the seller to carry back 5% of the purchase price. Now, the bank will not allow for a deed of trust to go onto the property. So what essentially, if this works, and this is a potential workaround I see that will probably have to happen a lot in the business, is that we're structuring their 5% carried interest as what's called preferred equity. So they will maintain a percentage of ownership in the property, the seller will, as opposed to carrying a secondary deed of trust, because the lender will not allow a second loan behind its first position, which is typical in commercial. However, many lenders do allow a second deed of trust, but the lenders, again, are being extremely cautious, and they don't want to see a property over leveraged. That caused a problem, a 5% of the purchase price problem for us. And the way we're working through that is structuring that carried interest as preferred equity as opposed to a secondary deed of trust. Just one idea, something that we're working on, which is what goes back to kind of my initial thoughts of, look, you got to be creative in this marketplace. You have to figure out ways to navigate and work through the scenario. And that's why I think, it's time to kind of sharpen the axe and build your skill set in terms of how do you navigate through the real estate business. And I don't think this is going away. So over the next 12 to 18 months, I really do think that everyone in the business, whether you're a broker, agent, you're an investor, developer, you're a financier, you're a fund, I think you need to be head up, eyes open, first of all, meaning that very in tune to what's going on in the marketplace. Not necessarily the mainstream media news headlines, but what's going on in your direct marketplace from a transaction standpoint, from a business economic standpoint, who's making moves, who's leasing space, who's occupying buildings, who's selling portfolios, who's buying portfolios, so that you can be in the know, number one, and then that you can make your plans accordingly. And I think the other thing we need to be prepared over the next 12 to 18 months is to be extremely nimble. I think you have to have a plan of action for you and your business or your investing portfolio, but you also have to be able to be nimble enough to adjust quickly if there is, another major outbreak, if there is another shutdown, or if the repercussions of the shutdown really impact the economy. You've got to have your plan, but you've also got to have some ability to be agile in the marketplace. And the third thing, as I would say, is to not be over leveraged. Do not buy a deal for more than it's worth. That was happening in the last 2-3 years because people were doing exchanges and just had a bunch of money. And a lot of people overpaid for properties. This is not the time to overpay for properties. Again, I don't think we're going to crash out. I just think you don't want to be over leveraged. You don't want to be having your capital too deep into a deal to where you feel like you're stuck and you're making negative cash flow. You really have to be wise up front about if you're going to buy a property or if you're going to advise someone to buy a property, making sure they get into it at the right price point, at the right level of cash flow, so that they can weather the storm if there is a storm, or if the storm continues, and then that they can be profitable on the back side of it. But we'll get more into guidance, and I think every single time we do one of these shows, I'm going to be giving you tips about guidance. And speaking of which, you want to dial into our next show on November 9th at 12 p.m., which will be live on Facebook, and we're going to be going more into detail about what sectors are affected, repurposing, the lending, what's going on in lending, and of course guidance that you can navigate through this. And then November 9th, we'll know who the next president, or if the existing president will be sitting at the same seat. I think that's also going to affect some things as well. So I'm looking forward to seeing you guys November 9th, 12 p.m. Eric and Jenny, before we wrap, do you guys have any, closing thoughts, comments, or questions?
I do. You were talking about the moratorium, so I think that's a big deal. Yeah. And we know we have them on single family residents, and I try and tell people, if you can make your payment, do make the payment. And I think it's the same thing with commercial. It's going to come back if you don't pay your payments. So you're seeing a lot of people that are actually closing down and just giving up. Yeah. So what do you tell people that are like on the brink of closing down and they're just not sure and what it is they can do? Yeah. I would suggest to them that maybe they downsize, just like a home. If your home is too big, you downsize. Just like commercial, I would assume you would want to downsize. Take the equity that you have and reinvest in something, repurpose it into what you need. Is that something that you agree with?
Absolutely. And I think for a business particularly that is maybe on a lease, right? If you own a building, it's a little bit different, but if you're on a lease, what I would say is before you close your doors, attempt to negotiate with the landlord some sort of workout that would allow for you to stay in business. And here's why I think that might be really good for the landlord, is because a lot of people, tenants, are not beating down the doors to lease out commercial spaces today. And if they are negotiating aggressively. So the theme for landlords right now is, if you got a good tenant, do whatever you can to keep them. So if you're a business looking at shutting down permanently, maybe before you do, make a last ditch effort to renegotiate your lease in a way that says, hey, I'm going to shut down, go out of business, or we can do X, Y, Z. That'll allow me to stay in business. Here's my action plan of how to ride this out, get back on track. I think that'll allow me to stay in business, but more importantly, allow this space to stay occupied with this, with this operation. And I think landlords are willing to hear that if there is a plan in place, especially because, like I said, getting rid of that business and trying to replace them is going to be a very difficult task. And if a bird in the hand is always better than two in the bush. So the first thing I would say is attempt to renegotiate with your existing landlord. And if that doesn't work, you mentioned downsizing, you could probably get out of your existing lease. Now, I don't think they're going to be able to come after you and sue you for the balance. That's part of the thing about what's going on. That's just a sticky situation. If you can't work it out with your existing landlord, you may be able to go to a smaller space and work that out. The key, though, is to keep your reputation good. You don't want to just avoid the landlord, go dark, and not talk to them. You want to stand up. Now's the time to stand in the heat, stand in the pressure. Everyone knows we're in this pandemic, so it's understandable. So you don't want to disappear. You want to stand tall. If you can work it out with your existing landlord, work it out. If you can't, then find another space that you can renegotiate. You can negotiate aggressively with, but in the process, keep your relationship as best you possibly can with your landlord, because you'll probably need a reference for them to the next space. I hope that helps.
That was perfect. And to kind of piggyback on that, I have been pushing, it's the same thing with residential. If you're having a hard time, now is the time to take advantage of the equity you have in your home or your business and move it elsewhere, so that you can position yourself so that you can be successful through the pandemic. And then once you're done with the pandemic is over at some point, then you're in a position of positivity rather than negativity. Right. And it helps everybody.
Absolutely. And that's the big thing, just in a better position and a positive footing. And, but you gotta take the lead. Don't expect your landlord to work something out for you, or just someone to, it's getting ugly out there, especially for landlords, because a lot of their lenders gave them maybe 3 to 6 months of breathing room. But after that, and that 6 months has ended, a lot of the commercial lenders are not giving any more breathing room. So landlords are getting a little bit desperate, but it's a matter of creatively solving a problem. Those who can do that will win on the backside of this.
Steve, you're doing a fantastic job, and I really appreciate the expertise you bring. I'm excited about this show, folks. The next one is going to be November 9th at 12 o'clock with your host, Steve Peterson, commercial real estate expert. and he's going to be breaking out all these wonderful topics. He just kind of did a high-level overview over each one, and this is another reason. Steve is another reason why you need to connect with the Power Is Now. We have a lot of shows on our network now, and new shows coming. Individuals with experience and credentials that you can trust and believe they are truly trusted advisors. That's what a VIP agent is. And Steve, I can't say enough, I really can't, about you devoting the time to helping us provide some great programming and information to consumers and real estate professionals alike. So thank you for your time today, your show today, for being on the Power Is Now Network.
It's my pleasure, Eric, and I love what you're doing with the Power Is Now, providing quality content, particularly to the real estate industry. That's what we need. And as practitioners, we need to take that, the content that we're getting and bring it back to the marketplace and provide value. So we don't know what's going to be, what things are going to be like next month, next year, but we do know that we can keep our feet to the street, head up, eyes open, and provide guidance to people who are trying to do the same thing. So I really appreciate it. Thank you guys for having me on this show and creating this show. I'm looking forward to November 9th, dialing into. I want to make sure everybody listening to this, make sure you go vote, whatever your background is, whatever you think, make sure you get that vote in. It's a week away, and we'll when we come back on November 9th, we'll know kind of where we are, and we'll dial right into the next stages of the commercial real estate market and what sectors are most impacted. So I really appreciate everyone for joining. Looking to seeing y'all on the 9th. Stay safe, stay healthy, and stay productive.
Want to keep up with the current developments happening in the world of real estate? The Real Estate Roundtable, hosted by Eric L. Frazier, is a show you do not want to miss. The show features a panel of VIP agents who are passionate about helping people. It is what they do best. They discuss today's hot topics, latest market updates and trends. The panel also conducts interviews with prominent figures in the industry. New episode every Friday live on Facebook and replay on the Power Is Now YouTube channel.